What would this mean to Grayscale? I mean, 500 million plus would be what, about 5% of your total market cap for that particular fund right now. Have you talked to Scott Minerd about this specifically?
I think from our perspective, we've really seen institutions showing up to the Grayscale family of products for at least the last 12 to 18 months. In fact, as of Q3, about 80% of our asset inflows were coming from institutional investors. So we're really excited to see increased participation from this client segment.
There are reports that increasingly family offices are also joining the ranks of those investing in Bitcoin. Tell us what is different about the institutions holding Bitcoin these days and family offices holding Bitcoin in terms of their time horizon. I mean, I would imagine versus the run that we saw to record highs a few years ago, the holdings here are more durable in that they're longer-term holdings.
There's no question. I think most investors that are allocating to the space these days are really thinking about Bitcoin over a medium to longer term time horizon. We're not having conversations with investors around Bitcoin 101 or 201. They're really trying to think about where Bitcoin fits in their portfolios. And I think for a lot of the investors we're dealing with now, there's definitely a rotation underway out of assets like gold and into assets like Bitcoin. Particularly, I think you just saw in this last week, we saw some of the largest outflows from gold funds on record. And so a lot of investors are trying to figure out whether Bitcoin is an inflation hedge, a store of value, it's a high-tech investment, ultimately trying to scale up to that appropriate position for their portfolio.
How much of a store value is Bitcoin in your view, Michael? And I ask you this because I interviewed the CEO of a company, MicroStrategy, last week, Michael Saylor, who invested basically 75% of the cash on the balance sheet into Bitcoin rather than holding cash in short-term investments. And if you're a believer that it is as stable a store of value as gold or perhaps U.S. Treasuries, then yeah, that's a good move. But is it too volatile for that, or would you say, yeah, it could be an alternative to cash on a balance sheet for a corporation?
Well, I think public companies adding Bitcoin to their balance sheets has certainly been a phenomenon that we've seen in 2020, and one that's really only increased public support and interest in the asset. But I think where Bitcoin really starts to outshine historical stores of value like gold is its verifiable scarcity, its portability, its divisibility, and ultimately in a year like we've had this year, people are thinking about Bitcoin along the lines of something that is much more suited to a digital world rather than an asset like gold, which may have been much more suited to a physical world. And so that idea of a store of value is definitely changing amongst investors' minds.
Hey, Michael, question about your own business, which is you're really the only fund out there that exists in this way. Why buy your fund, and why would institutions like a Guggenheim buy your fund rather than buy Bitcoin directly? And I ask specifically because the fee structure on your fund, dare I say, is very high. You're charging effectively 2%. That's a lot.
I think for a lot of investors, buying a bearer asset like Bitcoin can be challenging and doesn't fit within their legal or operational framework. So as an institution or as a family office, whatever type of investor you may be, by using Grayscale Bitcoin Trust, you have the ability to gain as much or as little exposure to the asset as you want and do so through a titled security. It's audited, it has a QSIP, and it's actually now an SEC reporting company. So it files 10Ks and 10Qs. And so for a lot of investors, that makes investing in this asset something that feels really normal and within, again, their legal and operational framework that they can get behind.
Shepard Smith here. Thanks for watching CNBC on YouTube.